The country meets the criteria for joining the euro. Is the population of Latvia psychologically ready, though, do you think?
I think the population is ready. I think we have done good work in explaining the people. There are many people who probably believe that that shouldn't be done based on the previous monetary or fiscal or money conversion reforms in Soviet times, and they believe that there might be some slippages or some changes in exchange rate, or people could lose some savings. But in generally, I think they're ready.
Or just a negative feeling still about crisis?
Well, I think we have to explain that the crisis in Europe is over, and once the people know that Latvia will not have to rescue any other country, I think sentiment is immediately positive. And I think we have seen that our neighbors in North Estonia, once they have introduced the euro, the support for euro has risen from 50% to 65%.
Price pressures have also risen.
I think it is not because of euro. You always have to be very, very careful when you're looking why the prices have went up. Maybe these are administratively regulated tariffs. These are gas and gasoline prices, non-processed food, but not specifically euro.
So you're not worried about an inflation issue, a price rise issue? Because
of the euro, I think we have studied the cases where the countries have been introducing euro before during the last 5 years, and the net effect is probably between 0.2 and 0.3 percentage points.
How sustainable do you think is the recovery we're seeing now in Europe? Clearly there have been some bumps along the road. Yesterday's PMI's got economists talking about the fragility of the recovery. What's your view, and what more can the central bank, the ECB, do?
Well, it's difficult for me to speak about what the ECB has to do. I know exactly what was the success of Latvia and why we are so successful, and why the sustainability of Latvia could not be questioned, because the fiscal house is in order. There's no more speculation whether Latvia has to consolidate more or not. I think markets clearly realize that finances have been in order, and money starts to flow in, investments start to flow in. The sooner the fiscal house of the other countries will be in order, the more investments, more jobs will be created there, and the economy will be doing just fine.
I asked you about the ECB because, of course, that's the central bank under which you will be operating too. Will there be a need for another LTRO, do you think?
I think you should invite me back, and I will be speaking at the beginning of the next year about these things once Latvia really becomes the EMU member.
The ECB, and we talk about the ECB because the ECB has also questioned the viability of the country. I've mentioned inflation rates already, but it's also talked about this heavy reliance on a non-resident deposit base. Clearly, comparisons arise with Cyprus in some people's minds. How worrying should this reliance on the non-resident deposit base be?
There has been never reliance on non-resident deposits. Non-resident deposits historically has been on a level between 40 and 50% of the total deposits. Comparison with Cyprus is absolutely out of the picture, because Cyprus economy versus the banking sector was 8 times smaller, or in other words, banking sector was 8 times bigger. In Latvia, it's only 1.3 times. So, and I think we explained everything at the beginning of this year, once having these accession discussions with European Union, and I think just one letter and 3 meetings was enough.